8 videos down, 1 to go. Welcome back traders, I'm Lance Beggs from yourtradingcoach.com. Welcome back to our series on price bar reversals. Today we're going to review the pivot point reversal. The pivot point reversal is a short-term reversal pattern occurring at market tops or market bottoms. It has nothing to do with and should not be confused with floor trader pivots, which are areas of potential support or resistance for the next trading session, mathematically derived from the previous session's open, high, low and close. Nothing to do with them. We're looking at a market top reversal first, at the top of an uptrend. Ideally, also at a point of previous resistance, but not essential. The word pivot actually means the point at which things turn. So in the example on the screen, the reversal point here is called the pivot point. What we have here is a pivot bar, let's call it bar 1, which has a higher high than the preceding bar. We then move to bar 2, which has a lower high, and closes below the low of bar 1, or the pivot bar. The positioning of any other open or close tab is irrelevant. The only one we care about is the close of bar 2, which must be below the low of bar 1, or the pivot bar. Well, to look at it a different way, which I tend to find a lot easier, we have a V-shaped reversal sequence here. A lower high, higher high, lower high, forming a V shape, with the close below the low of the pivot bar. Confirmation of the pattern is through price trading below the low of the pattern at this point here, continuing the downward move, and a stop loss should be placed above bar 2 here, or ideally above the whole swing high at bar 1 or the pivot bar at this point here. Having been through a number of these already in the preceding videos, you should be getting quite used to determining the change in sentiment within the price bar reversals. It's quite simple in the case of a pivot point reversal. Bullish sentiment exists in the uptrend from here. We know it does because that's what causes price to rise. Demand is greater than supply and the bulls are hitting the ask price and driving price higher. This continues right to the top, which has a higher high than the previous bar. The bulls were able to continue their dominance, driving price to higher levels. However, at this point something changes. Demand has dropped off as supply has increased. During the time frame represented by the next price bar, the bulls are unable to push price that high again. They failed to match their previous effort, and the bears have struck a blow in not only driving prices down, with supply overcoming demand, but to drive it down far enough to close below the lowest point of the previous bar. Quite a decisive fight back from the bears. Consider your reaction here at this point if you were long and price formed a pivot point reversal and then displayed confirmation through trading below this price bar here. Many traders will be taking the opportunity to exit their position here, or at least lighten it and tighten the stop on the remainder. And many traders will be placing an order to enter short. The increased order flow from the longs exiting and the shorts entering can act to help propel price further down, leading to a possible change of trend from an uptrend to either a sideways market or a downtrend. The downtrend reversal is just the same but opposite. Price trends downwards, ideally into an area of support. The pivot forms a lower low. The next bar has a higher low, and price closes above the high of the pivot bar. So an easy way to see this is the V-shape reversal sequence. Looking from here, we have the higher low, lower low and higher low, forming a V-shape with a close above the high of the preceding bar. Confirmation is price trading above the high of the pattern at this point here, and the stop loss should be positioned at least below the last bar, or ideally below the whole swing low at this point here. And the psychology is just the same as the uptrend but reversed. Bearish sentiment exists during the downtrend, but something changes at the pivot. The bulls stage a comeback with demand overcoming supply. They prevent the bears from breaking to new lows and also drive price much higher with such conviction that it not only achieves a new high but also closes above the previous high. Short-term victory to the bulls. An increase in bullish order flow will likely exist if price continues to trade further above the highs at this point here, as shorts cover their position and new bulls enter long. Let's check out some examples. Okay, we have here General Electric on a daily chart. Price moves down into a V-shaped bottom formation. Higher low, lower low, higher low, with price closing above the previous high. Then again, we have attempted retest, second attempted retest, and another pivot point low. You'll see once again V-shaped bottom, higher low, lower low, and higher low, with price this time closing well above the previous high, leading to a beautiful move up within General Electric. Okay, what do we see here on this daily chart of Lexmark? I want to just show you how these pivot point reversals don't necessarily always jump out of the chart at you, but if you can train yourself to see them, you can get into some great moves quite early. We have here price trending upwards to a red bar at the top there, just above the pointer, that clearly rejects higher prices. It doesn't quite meet the definition of a bearish rejection bar, but hey, technical analysis is not perfect. It's a clear rejection of higher. For me, that's bearish. Price then rallies on reduced momentum up to retest those highs, but can't quite do so. At the top here, we have a V-shaped top formed by the highs. Lower high, higher high, lower high, with price closing below the low of the pivot bar. Confirmation the next day as price trades lower leads to the start of a really nice downtrend. So a great signal here to exit your long position, or perhaps just tighten up your stop below the previous swing low, or a great entry signal at this point for a short position. I'm Lance Beggs from www.yourtradingcoach.com, wishing you as always many profitable reversal patterns.